Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's really nothing in comparison to the membership you get once you join the premium membership. Once you join the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity and we'd love to help you start making winning trades in the market. Alright, so let's take a look at these charts here. I'm going to start off with Target. Target is one that we've liked for a long here based off of the false breakdown that we saw. So what makes it a false breakdown? So we had this trend line started here, got a bounce here, got a bounce here. So clearly this trend line is important because you can see Target is reacting to it. So we break this trend line right there. We break below the 50-day moving average, which is this red line right here, okay? Looked bearish, right? Well, wrong. We broke back up, back above the trend line, and back above this resistance right here. So this is going to lead to a swift move in the opposite direction, which is upward. So we had that false breakdown right here, turned into a false breakdown when we broke back above this resistance right there. False breakdowns lead to swift moves in the opposite direction. We're still targeting about $64 conservatively on target based off of this previous support right there. We may even try to fill this gap up here at about $67. All right, so those are conservative targets based off of this false breakdown and also the break back above this resistance. You can clearly see this is a key level right here. And now we're breaking out to new 52-week highs. Very nice action on target. The next one we're going to cover is IBM. And IBM, this is looking constructive. Right here we've got some nice levels to play with. All right, so we've got this clean resistance level right here. Started there, rejection there, rejection there, rejection here for a few days in a row until we finally broke over it right here on the 9th. All right, that was last Monday. We broke over that resistance right here. We've tested it successfully right here on IBM. That level is right around 147, okay, just below 147. And we also have a nice trend line to use as a level of support as well that's just below that. So started here, got to bounce right on it there, and we're right at this level right here. So we've got to hold this level for IBM to head higher. I do think it's going to head higher here, but what you got to understand is that we've been in a major downtrend here for quite some time on IBM, and this could be potentially just a bear flag. And a bear flag is just a continuation pattern, and kind of like how we did right here. So traded sideways. It looked like we're going to break over this resistance right here, but then we broke back below it. And then you can see the kind of move that we saw after that. So we really need to hold these levels here on IBM. I'm not saying it is going to break. I'm just saying you got to be open to all possibilities here when you're trading these stocks and not be married to a certain direction or a certain opinion here, because that's what's going to make you lose money in the market. You want to be flexible. All right. So IBM has to hold 147. If it holds 147, I think it can come up here and tag about 154, and that's a huge level of resistance from all this sideways trading. About 2.5 months, almost 3 months straight of sideways trading. You can see the volume by price, this big red bar and green bar right here. That's the biggest volume by price bar right here. So clearly that's a level of resistance. The next one we're going to touch on is Lilly and Eli Lilly, and you can clearly see it's reacting to this level. I'm going to show you right here. I'm going to delete this Fibonacci retracement level just to kind of clean up the chart. But we've got this resistance from back here late 2015. Right here, we knocked our head into it. And then right here, you can clearly see we tried to break over it right here, but we had this rejection candle right here, which to me isn't a huge deal because the following couple days just traded sideways and we could have recovered. But right here, we have this clear rejection and a gap down on LLY, Eli Lilly, and to me, this is a great looking short. It's a clear rejection of these price levels. We've got this rejection candle plus this gap down at this huge resistance level. To me, Eli Lilly is going to head lower from here based off of that, and it's definitely something you want to look for. The next one we're going to touch on is UPS. And UPS, we've been mentioning this resistance level for quite some time. It's up here near about 120, 75, 121. It was previous resistance there. And here we come up here, clearly reacting to that level right there. And then, as you can see right here on Friday, we had a bearish engulfing candle right here with a gap up over the previous day's high, and then we ended up closing below the previous day's low. To me, UPS is looking suspect, and we could be seeing some lower prices on this stock. So the next one we're going to touch on is Wells Fargo. And Wells Fargo, last video we did on Wells Fargo, we said that we were coming into this resistance level and most likely it was going to come down. We had a reaction to earnings, and what do you know, it headed lower right there. So congrats if you watched that last video and you followed along. Just to recap why we thought it was going to head lower, backing it up so you can really see the clear level of resistance that we had. So here's that resistance right there, right there, right here, and we came into it right here. And as you can see also, it was the volume point of control right there, this big bar right there. That is the volume where most of the volume on Wells Fargo has traded, and it was above where we were at. So when you come up to a volume point of control, it's a level of resistance, all right? When you come down to a level of point of control, it's a level of support. So just another way of looking at support and resistance, all right? So another reason was because we had this Fibonacci retracement level that matched up perfectly with that resistance level. If you do it from the highs here to that major low that we saw right there, and that matched up perfectly with this resistance level, you can see that 61.8 Fibonacci retracement level, golden ratio right there. So that's why we headed lower. Congrats if you followed along. Really study this, these levels here and why we liked Wells Fargo for a short there, because you can take it into your own trading. So we had resistance, volume point of control, and Fibonacci retracement level all matching up at the same exact level. So the next one we're going to take a look at is BABA. And BABA, we came into this resistance point right here. We mentioned that it was likely going to head lower. We got that here, confirmation on Thursday right here with this gap down and then close below the previous day's low. So we said that BABA was going to head lower. Now it's heading lower. So congrats if you've been following along. This is really a short-term trade right here because, you know, clearly this stock, you know, let's just pull it back here, is extremely bullish, all right? Especially since this year we have barely seen any kind of a retracement. So with this kind of a stock, and clearly it's bullish, you want to pick your spots very, very carefully on when you short it. And we clearly nailed this one right here, but this is, again, this is just a short-term trade right there. And we're coming into our target near about 175, which could definitely give Alibaba a bounce here. You can clearly see we've got this trend line started here, got a bounce there, here, right there, here, and then we're coming into that level, which is also just above the 50-day moving average, which is that red line right there. So we'll see what happens. Also, you know, if Alibaba breaks this trend line, you know, most likely it's going to head lower, at least into this 160 level. It was previous resistance right there, right there. So that's a level of support you can use. So, but as it stands right now, Still very bullish overall, but we're just looking for a little mini retrace lower, a few bucks lower than where we're at right now. The next one we're going to take a look at is BIDU. And BIDU just very, very bullish. Very bullish here, breaking out to new all-time highs. I'm going to back it up so you can see on the weekly time frame right here. So here's the previous all-time highs right here. This is the weekly chart. And look at this weekly candle right here breaking over that resistance. To me, this is very bullish for this stock. I think it's going to head higher. You can clearly see it's using this level as a level of support. So if we do head lower, this is going to be a nice level of support to use. So about 251, 252 is that level of support that you should look for a bounce on. I definitely think the stock is heading higher. Of course, it's got to hold this 251, 252 level. If it doesn't, then I think it's going to head lower if it breaks below that 251. But let's not get ahead of ourselves right now. As of this moment, it looks very bullish and like it's going to head higher. Another thing I like is that it broke out with some pretty decent volume on that day that it broke that resistance. So that's another great sign for BIDU. So thank you for stopping by and watching this video, everyone. Again, if you're not already a member at thetradinganalyst.com, visit us on the homepage, get to know us better, and then join the premium membership. As soon as you sign up and join the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity, and we'd love to help you start making winning trades in the market.